We had a workshop recently at the Winter Park Library, and I wanted to go over a couple of the key topics and questions that I received. And they really stemmed around two main topics. And it's something that I see a lot of people make mistakes on. And the two topics are around diversification and then also not making any changes. So I thought I'd go through quickly some of those questions and concerns I heard from folks. And I hear a lot, I'd like to keep everything the exact same. I've heard once you pick an investment strategy, stick with it, pick a lane and stay in it. And there's certainly some merit to those long-term investment cliches, but we need to be flexible with our investment strategy as well. Meaning, yes, there is some merit in the buy and hold strategy that does work well, but at the same time, we've seen a lot of changes with interest rates. And I talked about a couple different examples during the workshop on when interest rates go up and down, different products and different ways to invest come in and out of favor. Whether it's something with the stock market, whether it's something tied to the bond market, maybe some bank type product, certain things come in and out of favor depending on where interest rates are. Another one, inflation. Inflation's been high at certain points. It's starting to come down a little bit, but inflation affects the market as well in terms of, again, what's in favor and maybe what's out of favor, depending on those two major things. Again, interest rates and inflation. So I'm not saying, buy and hold is dead or, you should always be moving your investments around. That's not necessarily it. But there does need to be some flexibility as the market changes, again, with your investments. Another thing I've been seeing lately is around diversification. And one thing I always like to remind people is that there's a lot of great investment companies out there. And there's a lot of products that we use. But sometimes, even if it's from some of the big names, when you look at what stocks or what actual investments are being held inside the product, sometimes they're all the same. So sometimes there'll be the large US stocks that we all know. And yes, you might own 3 different investments, but if you take a look at what they hold inside, it could very well be the exact same thing. The reason this can be an issue is that they're all going to go up and down at the exact same time. And you might feel, well, I own 3 different things, but you might have all your eggs in one basket and you might not be properly diversified. So certainly something to think about in terms of, yes, you might own multiple things, but do they do different things at different times? So I want to make sure that we are diversified, which I know is cliche, and we also want to be flexible with our investments. These are the two key topics I talked about at the last workshop. Hope you can make it to the next one. And if not, or if there's anything you need in the meantime, don't hesitate to reach out.